So, welcome to the NZ Everyday Investor. My name is Darcy Angaro. I'm sitting today with Paul Quickenden from Easy Crypto. How you doing, Paul?
I'm great. How are you doing, Darcy? Nice to chat again.
Likewise. For our audience, can you describe who you are, why you're passionate about this space called crypto?
So I'm the head of corporate development for Easy Crypto. I've been in the space since early 2018. I've always been attracted to disruptive technologies and things that are trying to, address big social agendas. And at the moment, for me, cryptographic assets are, hit the sweet spot. And Easy Crypto's vision about bringing in wealth to everyone, it just really aligns to me personally. So that's where I found my happy place. So.
That's your happy place. And it's cool, right? Like it's when you look out there in the world today, there's a lot of pretty scary and pretty dark things going on. But I know for me personally as well, whenever I look in the decentralized financial space, I get full of happy thoughts. And I think, wow, there's hope out there. And actually, there is this community of people that are building something for people, and it's going to go good places. It is genuinely a bright spot out there. So I'm quite passionate about it as well. So today, we're going to be talking about Ethereum and specifically Ethereum killers, and that will kind of make sense as we go through. But to start with, can you give us a background as to what Ethereum is?
So Ethereum is the second most popular cryptographic asset, just by market cap, and probably more popular by usage. It is probably best known as being a Generation 2 technology, with Bitcoin and those networks being the Generation 1. And its gift to society was it really enabled this thing called smart contracts to be built and distributed, but in a decentralized way. And so smart contracts, again, I'm not a technologist, so first disclaimer, I don't want to offend anyone. They're simple contractual things, not so simple anymore, but that if then that happens, and that sort of stuff. And they talked about them so kind of in the early days of being like the programmable internet. And, to a large degree, they've been able to fulfill that. It has a token that it uses to pay for services on it, and that's called ETH or Ether. That pays for what they call gas. And gas, like you go in your car, it's gas for transaction fees. And so anytime you initiate a buy or a sell, or things like minting an NFT or whatever it is, a transfer, you're going to be paying a small or not so small amount of fees, depending on the time. It's famous for its founder, which is, there's this guy called Vitalik, who's a bit of a genius. He taught himself Mandarin while programming up Ethereum, and he's quite famous in the crypto sphere. Ethereum, it ran an ICO, I believe, in 2014, which, ICOs in those times were pretty rare, and started building in 2015, and has, never really stopped. It has really robust mechanisms for adding improvements to its network, called it Ethereum Improvement Protocol or Proposal, I think, EIP. Certainly over 1,000 of those been done already. And right now it's going through a pretty profound change, moving to something that is colloquially known as Ethereum 2. And we can get to that and what that's about later in the chat if you want.
If you're coming from a traditional finance space, Bitcoin seems to be really quite polarizing. It's a little bit edgy. And if you hear someone like me talking about it, it seems like I'm fairly irresponsible sometimes, encouraging people to at least think about this. But when you flip on over into the DeFi world, it's like Bitcoin is probably the most annoying and boring and stale and stuffy asset out there. But just as it relates to Ethereum, I'm going to pull up on the screen just for those that are watching. Effectively, the deal here, from my understanding, is that you can prioritize two of these three things, but you cannot deal with all three. So we have security, decentralization, and speed. So with Bitcoin, we obviously have decentralization and security that are prioritized, but speed, not so much.
Yeah.
With Ethereum, we have, I guess, security and speed, especially. You can fix one of these problems, but you might kind of, deal with the other ones later on, hopefully,
Yeah.
or
Yeah.
you might just be taking a risk. So with Bitcoin, you truly have something that's decentralized. There's a lot of nodes around the world, whereas when you get speed, you generally sacrifice the number of nodes. So I guess that's said to be moving more towards centralization the more we crank up the speed. Is that right?
Yeah, I mean, that's the theory of the trilemma. And so you're quite correct regarding that. But I would caveat it there is a bunch of new thinking and technologies and different ways of making blockchains consensus work, and there's lots of different ways of thinking about that now. To say Ethereum's not decentralized, there are people who argue it's kind of centralized because they may all be running on AWS instances, for instance, but there are lots and lots of nodes, for instance. Yeah.
So if we talk about some of the problems with Ethereum right now, if we were to kind of just to put out there, hey, what's wrong? And thinking about Ethereum maybe as an infrastructure asset in the crypto sphere, where people build stuff on it, a lot of NFTs, that's all been built on well, not all, but a lot of it has been built on the Ethereum network. It has smart contract capability. It's programmable. It's quite interesting. It's kind of like a decentralized computer. What are the problems, if you were to kind of throw a couple of problems at me with it?
Ethereum does have a few instances in its history, and not so much at the moment, but where scaling problems do exist. And so, I can think of maybe, was it 2019 when Uniswap, which is a big DEX, did an airdrop to all of their customers, so like a thank you bonus, and transactions went from minutes to hours and that sort of stuff, and the network kind of clogged up. And because it's a shared network, what that means is other projects and services were all affected by that. It's like everyone's using the motorway at the same time, but somebody, like a truck convoy, for instance, comes along and just slows it down, and you're all like, what the heck? So the other thing that people talk quite a lot about is the fee structure. So the way, I'm going to try and keep this simple, but the way the gas price works on Ethereum is kind of like surge pricing on Uber, except that it's not Uber that sets the surge pricing at that time. It's like all of the drivers agree at the same time that we're going to charge more and more. And you can see transactions jump from, I don't know, 20, 30 bucks US to hundreds. And that's because of the way it does its consensus mechanism. It's mining at the moment, and the miners can pretty much go, we're in hot demand, there's lots of transactions, I'm going to pick and choose the people who are willing to pay the most. Fees can be extraordinarily high, and paying a few $100s to do something fairly simple, it is arguably not the future of finance. So that's a problem. The last one is it's written in a language called Solidity, which is kind of obscure in programming language and may not be 100%, ideal. And there's certainly a chains out there, and I believe Solana's the leading candidate, which are building blockchains, but in completely different, more standardized languages like Rust.
Yeah, that's right. So they're using a language that more people kind of speak, so it's probably got a better future from that perspective, right? But they're using Solidity.
It means they can co-opt more developers into the ecosystem easily, I guess, rather than, I want to get into Ethereum, I have to learn Solidity. Holy heck, there's no transferability to what I've got, that sort of stuff. So those are probably the things I hear the most. If you look at right now, the biggest gas guzzler on Ethereum is OpenSea, which is the NFT marketplace. Frankly, if you're trying to do a DeFi transaction and there's a big sale going on OpenSea, it's, it means it can be uneconomic for you. You might just leave your assets sitting in a DeFi thing rather than take it out, because it might cost you more than, if you got a small holding, it might cost you more to get it out. Then that is a problem that they're looking to solve.
So the two main ones would be the speed and the cost, and then I guess the third sort of one is the language that it's written in.
Yeah.
And we'll loop back into Ethereum later on and talk specifically about what's coming up. But before we move on, just one more thing around Ethereum, and this is, I guess, contrasting it with what a lot of people know and probably appreciate with Bitcoin, is the characteristic of having a finite supply of that asset. There can only ever be 21 million, but a good chunk of that is already lost. Your thoughts on the unlimited supply, or the way that the tokenomics work? Do you have any comments around that?
We have to come back to this, but in its initial release, there wasn't any cap on the supply of Ether. And so, every time every month there were more and more and more of them. And I think its supply is now over 100 million. Yeah, so circulating supply is 120 million, actually. There's no cap. It's the way it was designed, as opposed to something that was explicitly designed like Bitcoin to only have deflationary value. But when your vision is to be the supercomputer for the world, then that probably made sense at the time. but they're certainly looking at that going forward.
So let's talk about these ETH killers. And when we're doing this, we'll start off with layer one protocols, and that just means that we're talking about a native blockchain, right? So a
Yep.
brand new reinvention of the wheel. What's the first one that we're going to start off with here?
So just a caveat, this is the market speaking. There was clearly problems with Ethereum, and so people responded. And so so you've got you've got CoinGecko up. So BNB or Binance Coin is clearly an alternative. In fact, you could argue it's largely a copy of Ethereum with some distinct differences. It was launched by Binance Coin. In its initial conception, it was an exchange token. And so if you held it, you got fees reduction using the Binance exchanges. But I think it was 2019, Binance actually launched its own blockchain called the Binance Smart Chain Network, BSC network. And this coin is the gas of that one, but it's significantly cheaper. We're talking, transactions at sort of 20, 30 cents US. You talked about Ethereum not being as decentralized as maybe Bitcoin. This network is famous for only having 21 nodes. And there is, strong rumor that they're all controlled by certain parties. It has had in its past some instances where some funky behavior has happened. You can't get your assets out of the Binance Smart Chain the way you want it. But it is a vibrant ecosystem. It has its own DeFi space going on. So there's an exchange, a DEX called Pancake Swap there that does really significant volumes. It's got its own NFT marketplace. So, and it really, when I say it's kind of a copy of Ethereum, it feels very, very much like it. And if you're using, a Web3 wallet like MetaMask, it's the same wallet address. It is quick. Transactions happen in, 20, 30 seconds largely in my experience. And from what I've seen, and it is a cheap network. It feeds you back into Binance though. That's the issue. Like if you want to get from Binance Smart Chain back onto Ethereum, there are bridges, but the easiest way to do it, in my experience, is to go back through Binance. And so they just keep clicking the ticket in that regard.
Okay, cool. Give me another one.
There's a project that's been running for a really long time called Cardano. Its coin is called ADA. It was launched in 2017, and it was spun out of by some guys that were involved early on in Ethereum. It's got a heck of an ecosystem and tribalism that goes with it. But I'll be honest, inside of the crypto landscape, and I don't mean to be offensive, but it's kind of looked down on because it's 5 years on and it still doesn't even have smart contracts going on. It is still not arguably a complete blockchain because of that. But people, the ecosystem that's wrapped around it, and they keep believing announcements and things are coming and all that sort of stuff. So people keep owning the ADA coin. And it's done pretty well, like not as well as other coins. Like that BNB coin went up maybe 600% last year in 21 alone. ADA, because it's a bit older, only went up maybe, I don't know, 40% or something over 21. But people keep participating with the coin, right? And so it's quite common, and it keeps in the top 10 of by market cap and volume it has done for years. So that is a fairly popular coin.
Yeah.
I'll be honest, I'm not aware of any projects that are running on anything on it. Like I said, it's kind of a graveyard in terms of network effect, in terms of actually build stuff. But as a story, a narrative, it lives on, and tribalism is a real thing in crypto, and so it has its group of passionate believers, and so it continues on.
Yeah, and I guess that's one thing to maybe just to point out at this juncture is that what makes a project or what makes an asset succeed or fail or stall or whatever is often a combination of who the founders are and the network effect as well. And that network effect is so important to understand, because with Cardano in particular, correct me if I'm wrong, but that kind of was founded by some of the people that were originally involved in the Ethereum network.
Yeah. Charles Hodgkinson is the name that springs to mind. I might have that wrong, but he was certainly involved early on in the Ethereum build, and then he moved on to Cardano.
I guess again, it's like investing in small caps, right? The price for ADA Cardano on the Cardano network is very, very small.
Yep.
You look at the price of Ethereum right now, very, very large relative to
Yep.
Cardano. It kind of reflects the fact that, hey, maybe the network isn't very big, maybe it's early stages and they haven't yet built a lot of the capability or anywhere near the capability that Ethereum has. That's kind of reflected in the price, right?
Yeah, but I mean, Ethereum at 3,100. I'm looking at the charts at the moment, and with 120 million floating, Cardano's got 45 billion supply total supply. I don't actually know what the free floating supply is, and so at a price at $1, it's probably fair value. So there are different supply metrics or total coin issuances. So it just is what it is in that regard.
Yeah. Why don't you throw another one at me, Paul?
So the next one on my list is a project called Solana. It is a blockchain. It's built different, so it doesn't follow the standard EVM, Ethereum virtual machine model. It's built its own kind of protocol. It's doing it on Rust, which is a more common software development language. It's a very new network. Like I think it launched late 2019 or 2018, early 2019 in terms of come to market. But again, it's got a vibrant NFT and DeFi ecosystem. It's closely tied, I'll use that term, with FTX, which is a big centralized exchange. And I think it's Alameda Ventures are a backer, so a VC. So the same VC that backed FTX, the exchange, Alameda Ventures, is backing Solana to some degree. It is, again, it's a very fast network and it's very cheap, like cents for a transaction, that sort of stuff. Last year, in terms of its economics, man, it had a heck of a ride. Like I think you started January 21 at sort of $2 to $3, and in November I think it got as high as $250 US. So it really went at it in terms of its multipliers. It certainly has pulled back a bit, and so it's down maybe 50%. But interesting enough, there's been a couple of events. This is the first one on my list that's VC backed, and there's been a couple of events, not too long ago, where a new network has issues, and the price just didn't move. And you can see that it's got this stalwart of and in my interpretation is there's this stalwart, not financial advice, of investors sitting behind it who are prepared to just hold it up. It's certainly a very vibrant and growing ecosystem, and it certainly could be a true Ethereum challenger. It is just doing things differently, which is kind of cool.
I agree. It is pretty cool. And we recently did an episode where I purchased my very first NFT. It's pretty cool.
Yeah.
But that just goes to show, like, you can actually do stuff on it. And I guess maybe that is highly correlated to the fact that we have venture capital moving into it, because they're not going to move into a space where there's not a return, right?
Yeah, I agree. And having someone like Sam, I'm going to use his last name wrong, but the FTX Alameda guy behind it, he's got serious cred. I think he's the richest man in crypto at the moment. So, which puts him in, pretty rare company. So yeah. I've seen it in action. It's got, some great metaverse projects like Star Atlas going on. It's affordable in terms of transaction fees. It's fast. It's still a young network, so it does have a little few moments where there's hiccups in terms of lockups, but the team behind it seem to rectify those really quickly and are learning from their mistakes and getting on with it. So it's got a real tribalism thing about it as well. And as you say, it's Web3 enabled. You can't use MetaMask. You have to use, say, I think it was Phantom. You said different wallets, but they're very similar. They just are.
Cool. So let's move on. What's another one you want to throw at me?
The next network by CoinMarketCap and by our buy is something called Polkadot, and its token is called DOT. Again, a team from Ethereum started this, and at its core thing is speed. So they're talking about sharding, which is the ability to break up transactions across a network. And I don't want to show how little I know by talking more about it than that, but it's basically a way of making blockchains handle transactions and transactions per second faster, is the way I think about it. It started its thinking in 2017. It kind of got to launch, I think, in 2018. It has quite a lot of tokens, 1.1 billion, and it is inflationary. So, supply is increasing. there's a really interesting New Zealand company called Onfinality who work exclusively in that ecosystem, and they create those kind of, forget the name for, but the discrete projects that are running on Polkadot. And I spoke to them very recently and was surprised at how many projects there are running on there. Again, it is efficient, it's fast, and it is a viable contender for doing some of the things it's setting out to do, which I think of as, and I don't want to be offensive, but I think of more as enterprise uses of blockchains rather than public uses, which Ethereum is kind of known for. In terms of 2010, it did pretty well. It went up maybe, I don't know, from $10 to 55. 21 in 2021. Sorry, it went up from $10 to maybe 55, I think, from memory. It's down again to about $20, and it is VC backed. So Pantera Capital, a big global VC, are certainly on their table, and I think Three Arrows Capital, which are a very active VC in crypto space.
No, that's awesome. And again, you've kind of alluded to it a few times, and I always make that really clear at the start of these shows. This is definitely not financial advice. We're not saying, hey, these are the assets in our portfolio, and these are the assets that everybody should have in their portfolio, but everybody should be doing their own due diligence. And the beauty of this space is that this information is very available. Yes, There are scams, there's crap coins everywhere, but what we're doing is we're just talking about layer one protocols here so far. But
yeah, you might want to loop this somewhere else, Darcy. But in terms of thinking about these, like if you're of the opinion that Bitcoin at 45 and Ethereum at 31 is quite expensive, but you believe in blockchains, then a more thematic approach to investing, where you go, well, what are the great competitive layer ones out there? And again, not financial advice. Then you can maybe cotton onto these projects which haven't quite got as expensive as those two assets, and build a portfolio where you go, it's really hard to predict which one of these layer ones is going to be dominant in, say, 5 years' time. But here are some great contenders, and do it that way. There is index trackers, index funds, and that sort of stuff that are available in the crypto sphere. You can do that for other sectors like DeFi and NFT tokens and all that sort of stuff. My previous business, Brave Coin, made indices, so I know there's plenty of that stuff out, and so that's just a way of thinking about why you might want to be thinking about these types of projects, I guess.
Yeah. Totally. And it's kind of just really similar to how a fund manager works, right? So if you think about your KiwiSaver, you have a fund manager, and the goal is to optimize the return and minimize the risk for that given level of return. And they do it usually by allocating certain portions across certain sectors, or you could say themes. And so that's one way that you can conceptualize this. But especially if you are a self-directed investor, which almost the vast majority of people that are playing in the space currently are self-directed. They're not necessarily getting financial advice. They're not necessarily using funds which do the allocation for them. You still have to kind of think like the fund manager, right?
Yeah, and like your KiwiSaver will have a portfolio in energy and a portfolio in production and that sort of stuff. This is just a way of thinking about it in terms of the crypto sphere. And what is evident is that layer one blockchains with their fee-driven mechanism are quite an interesting space. And the more transactions, the more adoptions, the more again the higher the transaction rate goes, and being involved in those ecosystems can be quite an interesting space.
No, agree. That's good. So far we've talked about Ethereum, we've talked about Binance Coin, we've talked about Cardano, Solano, Polkadot. What's next on the list of things to tackle off?
I've got a couple more. Another new but popular chain is one called Avalanche. Its token symbol is AVAX, AVAX. Again, I think it went live 2020, not last year, but 2020. So very new in terms of that. It's a VC backed. It started as a VC backed project. Andreessen Horowitz is behind it in terms of VC, but it also ran an ICO in July. It is a DeFi focused blockchain though. That's Andre Horowitz have got a real thing about DeFi and building an ecosystem around that. And so I think with that lens on, they've this made a lot of sense in their portfolio. Again, you can access this one through MetaMask. I know that for sure because I've done it and seen it in action. It had a really good 2021 in terms of its coin. It went from, I think, 350 to 144, but it's come back about 35%. I think today it's sitting at $90. So, it has come back. Again, it's a very quick network from what I've seen. I haven't heard of any major issues with it in terms of its performance and all that sort of stuff. And it's just, again, in terms of what we're seeing at Easy Crypto, it's a fairly popular asset that people are stacking. So it should be on the list.
And it's quite cool. I was trying to learn a little bit about the AVAX, AVAX token, just on the way to work today, because just last night I was talking to one of my clients who has a small holding in AVAX, and I didn't have a clue what this was about. But when I was looking into it, it was like, it wasn't just like everything else. It had all these other branches coming off of it in terms of what it does and 3 different things. And it's like, whoa. But that's kind of what happens, right? Like when you start doing your digging around, you realize that it's not just a static space when you go here. It's very dynamic. It's moving so fast. Sometimes you might recognize and see like elements and shadows of traditional finance in this space. And sometimes you see genuine creativity and innovation happening. It's like quite fascinating, right?
Yeah, and again, like I said at the very beginning, it's market dynamics. You're seeing people who are responding to challenges or opportunities and just getting in there. It's interesting reflecting on why VCs are in here. I would imagine, I've not seen any research, and maybe someone like BNC who does great research could look into it, but I would imagine that, the VC model where they invest in 10 projects and 1 moons and bada, 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 I reckon somewhere inside of them they've looked and gone, holy heck, this crypto stuff has outperformed all of our investments. I'm generalizing. And so this is a space we need to kind of get into, and where is the best place to get into? And so that's why they're becoming more and more active.
This is where it's at. Like, this is where the innovation is at. This is the frontier moving forward. And ironically, it's decentralized, or it's more decentralized. And hey, there's a strong correlation between when you give people freedom and when good things happen. Who would have thought, right?
And it's giving rise to this thing called Web3, which is widely being hyped as the next generation of the internet and that sort of stuff. You're seeing interesting side peripheral moves, like I think Microsoft and Sony have both dropped billions in the last two weeks on gaming companies, and you could argue that gaming companies are the gateway to metaverses, and metaverses is a Web3 thing. That's just how they are at the moment. And so, networks and Web3 and all of that stuff can't be disassociated. They just are. It'll be a very interesting space for some years to come, I guess.
Agreed. I'm not quite sure if this one's on your list, Paul, but hopefully it's okay for me to kind of prompt you with this one. But can you tell me, like, are we still talking about layer 1 when we talk about this one, Algorand?
Yeah, Algorand is a layer 1 protocol. It's been around a while, I believe. 2019 it launched. It's a proof of stake network, so not a proof of work network. So what that means is, rather than a mining competition to solve a complex computer algorithm, it's more about, if you hold a bunch of assets, then you're trustworthy to attest that to the network and achieve consensus. I've probably done that a disservice, but that's kind of how I think about it. It's a partner-focused blockchain. Like, I don't think it's, again, it's coming at it solving a different challenge in the market. Again, it's got some interesting VCs on its cap table. This one's got Union Square Ventures. So, you've got Andreessen Horowitz, you've got Sequoia, you've got Union Square Ventures. Those are the holy trinity of VC land, and they're in Pantera, I guess. And so they're all kind of involved in this, as well as a whole bunch of other VCs. It has, though, I think from memory, a really big supply. It's got 10 billion, so it has a lot of supply. And it's token, but only 65% of it, I think, is in circulation. So circulating supply, so 6.5 billion of the 10 billion. It is somewhat popular in terms of Easy Crypto's buying profile. So it's a fairly popular token that again, a lot of people jump in behind and try to back.
Like everything, right? If you kind of just remember that we are still very, very early on in this ecosystem, for lack of a better term, you just have to remember that the high degree of volatility, if any investor is looking into this, I think it would be pretty reasonable to say, if you're coming from a traditional paradigm, really want to keep your exposure pretty small to this, anything that's really high risk, high volatile, which hopefully is promising in the future. Because, hey, check this out, right? Like 2019, the price super high, pretty
Yep.
long, long winter
Long
period here
window.
before it hit
Yeah.
a run up. Yeah.
Yeah.
So we have this from time to time, and when the next kind of cycle, if cycles do exist again in the future, when that happens, there could be a period where you're holding stuff that just doesn't do anything. Maybe it dies, maybe it never gets resurrected, maybe it never goes anywhere. So you just have to remember that when you're dealing with these ones, right?
Yeah, look, I agree with that. And, for me, volatility, I think of it as a double-edged sword. Like, the potential's there for large returns, but it also means you can get wiped out. And so looking at the prices every day is probably not the healthiest thing you can do if you're in it for the long run, put it that way.
Agreed. Okay, so just to keep on moving on, is there any other assets? Maybe if we just have one more, is there any other
Yeah.
assets?
So look, I'm going to add one last one, Darcy, and it's a slightly bit of an outlier. It's a very new protocol, launched, I think, late 2020. What's interesting for me is this one's got the daddies of the VC world behind it. So it's got Pantera, it's got A16, so Andre Horowitz, it's got Coinbase, and they are, I believe, trying to create a blockchain that's more suited to gaming, which like
Right.
I talked before about metaverses and gaming being quite closely aligned.
And sorry, just to clarify for those that are listening, we're talking about Near Protocol, which is NEAR
Yeah,
protocol. Okay, go ahead.
Near protocol. Yeah, my accent. So apologies for that. It's a proof of stake network. It's quick, and it will also have sharding, so it can scale really quickly as well. That's one of its things. Gamers apparently don't like lag, so no surprises there. So they got some pretty hefty challenges to solve. Again, 2020 didn't do the 400 or 500 times like maybe Solana or something like that, but it had a good year. It went from $1.50 to $20, I think, and now sitting around $12 US. It's an interesting protocol. It's an interesting project if you're thinking metaverses and Web3 and all that sort of stuff. In my opinion, it's certainly going that way. Max supply about 1 billion, yeah, and circulating is 600 million. So it is an interesting beast that is attempting to solve an interesting space. So that's all of the layer ones I wanted to talk about. Look, I mean no disservice to people who are interested in Phantom Network, FTM, or EOS, or TEOS, or Tron, or Hedera, or Thera, or Neo. There are just tons of them. And we've looked at CoinGecko. I'm also looking at Masari or Brave New Coin for data on these. Do your own research, have a look into the projects, see what you think, if this is the way for you.
Absolutely. And it's rewarding to do the research in this space. So it's not just like, hey, we're not just talking about listed stocks in the US share market. We're actually talking about stuff that's in a very innovative and evolving world, right? Again, I'm going to keep on saying it over and over again, but we're talking about interesting characters in a difficult situation. What happens? There's always a good story. So
That's right.
definitely there's rewards to do your own research here. So let's kind of loop back to Ethereum if we can. So we talked about the problems at the start, and then we talked about some other solutions or substitutions or alternatives that people can go to. But we can't forget, I guess, that Ethereum has a tremendously large network, huge amount of network. And if people were coming to the table and they wanted to, say, drop millions of dollars on an NFT project to build a community of followers around them, then they're not necessarily going to want to fiddle around with Solana and stuff like that. Maybe not, right? So we can't underestimate that.
So again, the network effect on Ethereum is extremely positive. That will make it very hard to topple. So Ethereum, recognizing it, can't stand still. Again, in my opinion, is responding to the market. And so there's been a multi-year program called Ethereum 2 running. They are delivering, not always to their timelines, but they're getting there. And the big thing that's happening this half of 2022 is what they call a merge. So they've already delivered things like staking and an Ethereum improvement called EIP 5119, which was basically smoothing out its surge pricing and all that sort of stuff. So they're definitely delivering. And they currently have almost a quiet chain called Beacon, which is running. And when they come together with this thing called the merge, they will moved from being a proof of work network, so similar to Bitcoin, where there's miners being rewarded for solving problems, to being a proof of stake network, which means, depending on who you speak to, it's more environmentally friendly. It should mean that the mining rewards encourage people to deal with not as profitable trades, put it that way. The way that Ethereum works is it's like a bus stop, and people can queue transactions. That's called the mempool. And then when things get busy, the miners self-select and only choose to buy or deal with the most profitable parts of that mempool, and the cheap ones get left behind. Whereas when they move to a proof of stake solution, the rewards are more standardized, and so it should mean that the fees come down, which is good. The other thing we talked about was its ability to scale when things get really busy. OpenSea runs a big NFT drop, and the network is clogged. So sharding is a technology I've mentioned before. It's a way of enabling blockchains, which are kind of linear, to process outside of that linearness and then us reassembling it together. That's something that is incredibly technical and beyond me, but it's something that is on the roadmap for Ethereum too.
Is it similar, like slightly analogous to the Lightning network that sits upon the layer one Bitcoin network?
Yeah, so I think Lightning Network is more of what we would describe as a layer 2 network, like it's like a side chain kind of thing. Whereas sharding is a physical change to the way they handle transactions on the network, and it just means, think about it as, instead of doing everything in a line, they kind of, I guess, batch it up and fragment it, and so people are processing various bits around it, and then they bring it all together. That's how I think about sharding. And it just means that you're not waiting on one computing resource to solve all of the problems. Multiple people are solving the problems, and then they bring it together. And it should mean that this distributed computer is much more efficient, and that's the plan.
So we're doing things in parallel rather than in series, right?
Yeah. And look, it's clearly an interesting area, because that's where Polkadot is, focusing on sharding, and I believe Avax as well. I might have that wrong, but it's a definite pathway for blockchains to become more efficient and scale better. So, Ethereum too, I just wouldn't write off. It is, they're a little bit behind, but they keep delivering. There's a massive community of developers, and organizations like Consensus that are supporting projects on it, and so many dApps, decentralized applications running on Ethereum, that it's going to be very hard to topple. And they have proven, and they continue to prove, that they are evolving. And will we get to an E3? Probably. And so, they're certainly responding to the demands. At $3,000, maybe $3,500 for an ether, it's probably getting to that tipping point where it's going to be quite hard for people to get their head around why you invest in that when there's this other thing for $2 or $10 or whatever it is. And so it possibly does suffer a little bit from that. But all of the very popular decentralized applications and dexes and all that sort of stuff have Ethereum running on it. And so it's just going to be a thing. And if it gets more efficient and the fees come down, then arguably it's going to be persistent for a long time.
Okay. And just coming from someone with enough knowledge to be dangerous, but not enough knowledge, obviously, with
that's my job.
same category. But if I was to own Ethereum and it changed, how does that actually work? Like, do I need to kind of throw that away and get some new one, or
no? The way the merge is happening is it'll if you imagine that they get to, I don't know, block 21 million, and then block 21 million and one, that'll just become a change the way the consensus works. So the mining part of it, think of it that way. But as an Ethereum holder, there shouldn't be any changes for you. They're not reissuing the token. They're not doing anything like that, to the best of my knowledge. So
because a lot of people might be aware that there's this thing called Ethereum Classic, much like Coke Classic, right?
Yeah.
Is that kind of that's a different story, right? Do you want to just
so that is what in our parlance in crypto that's called a fork. And again, back to tribalism, these projects start and communities wrap around it. and then it works by consensus, and so people agree, and the whole community agrees by majority vote essentially to progress in a direction. And for some people that's not tenable. Generally speaking, there's a bit of a toy throwing episode, and then they literally do what's called a fork, and they go, no, we're going in this direction. And so they take a timestamp and they go, right, from this point on, we're going to have this, and our network coin will be Ethereum Classic. And it's happened in Bitcoin as well.
That's right.
You got Bitcoin, Craig Wright's version. You got Bitcoin, the original. There's lots of history of doing that. And again, it is literally down to passion and tribalism and people just believing that this is the way forward to make this thing.
Yeah. It's democracy. It's democracy.
It is democracy.
I know a lot of people right now probably kind of pretty keen to kind of fork off from the rest of us right now, or maybe we're in that category. But in this realm, you can do that. So fork, bring it on, right?
Yeah. Well, to put that into perspective, all of this is open source software, right? And so it doesn't take a huge degree of effort to go into a GitHub repository, which is where all the code is stored, and go, I'm going to make this little tweak, and then suddenly we're offering our own. And there's lots of examples of that in the crypto sphere. You've seen very successful projects like SushiSwap, which is, I think, the most popular decentralized exchange. Sorry, Uniswap is the most popular decentralized exchange, but SushiSwap literally copied their code, and it's well acknowledged, and launched its own DEX just based off them, and they're very popular as well, right? And they've gone their own direction now, but in its genesis, it was literally a copy.
Now, as we finish up, I want you to just take our audience just through the lowdown. Some people might be thinking of getting into crypto for the first time. And again, I'm going to say, if people can, if they can pay for it, and if they can find someone to help them out here, definitely get some financial advice when setting up your own crypto portfolio if you can.
Absolutely.
But, talk to me a little bit about how Easy Crypto works. What effectively is it?
Oh, look, we're focusing on making your foray into the blockchain and crypto as easy as possible, and so we talk about ourselves as like a gateway to buying it. We're a licensed and accredited organization, so we have to do all of the know your customer and checks that come with being a financial provider. And then once you're set up, we enable people to simply deposit currency, New Zealand dollars, into our systems, and then you can select from anyone over 150 coins if you want to buy them, and have those sent to you and managed by you in your wallet. So that's kind of our business, and we operate in a global basis. So we've got 4 or 5 other markets running around the world at the moment. We've been operating since 2018, set up by Janine and Alan Granger, and recently taken on a bit of capital to help us with our growth aspirations. Again, we're ruthlessly focused on just making it easy and making something that can be quite technical and scary as simple as possible for people to get into the cryptosphere. And we do that because we believe that this is the genesis of the future of finance. Like we just think that the old world where everything's reshared and rehypothecated and it's really obtuse and you can't see what's going on isn't ideal. And we think that blockchains bring radical transparency, and we think that the efficiency gains through cryptographic assets are something that the world probably should start participating in.
That's awesome. And you don't even have to be a libertarian to try this. You don't have to be a vegetarian to try the salad here.
Right.
But hey, the bus has stopped at the stop. There's an opportunity for people to get on if they want to. But we don't know, right? We don't know what the future holds. So
there's clearly generations of technologies emerging, and so if you think, Bitcoin's already too expensive, or gone past its whatever, or you want to be into other coins, do your research and have a look at where these generation technologies are, and there's something for everyone in there, whether it's NFT stocks, whether it's decentralized finance, NFT tokens, decentralized finance tokens, whether it's layer ones like we've talked about today. There is certainly a smorgasbord of opportunity out there in terms of investigating and getting into the space and learning. And you can do it, with $100.
That's awesome. Awesome. All right. Well, thank you very, very much, Paul. Really appreciate your time today. And again, for those that are interested, there's going to be an affiliate link in the show notes if you want to sign up to Easy Crypto for the first time and put some money in there. We've got a whole bunch of stuff, a whole bunch of content out there already talking about things like custody and all sorts of things. So make sure that you do a lot of research around wallets, especially if it's your first time. And again, if you can get advice. So thank you very much, Paul. And I hope you enjoy the rest of your week.
Great to speak to you again, Darcy, and thanks for the opportunity.
No worries. All right. Take
All right.
care.